What's up, Kate? How are you doing?
Good, brother. How are you?
I'm doing good. This is cool. I like
Uh,
being right next to you, like in person. This is sick. This
This
is
is back.
sick.
We are doing in person this week, so
Yeah, just
something
happened to
new.
work out. We just
Yeah.
figured we'd give it a shot. So I'm excited. But just want to always start out every meeting with an update. So October 26th, it is a Thursday this month. We are meeting at the Sands Club, 5:30 to 8:30, and our guest speaker is going to be someone pretty powerful. I was doing some research on who he is and learning a little bit about him, and he is a really awesome dude. So I'm really pumped and excited about what he has to share and kind of what he's going to talk about and you guys getting the opportunity to know him as well as myself getting the opportunity to know him. So thank you, Damien, for the connection
Yeah.
there. But if you want to start, go ahead and give us your updates. What's going on in the real estate world?
Yeah, so just quickly going to hit on quarter four. As we head into quarter four, historically, the real estate market slows down by 40%. I just was reading a article this morning from the National Association of Realtors, and they were basically explaining that same thing. All of Realtor.com NAR data is suggesting that not only quarter four, but this week specifically, I think it was October 1st through the 7th, is the best time for home buyers to buy real estate. You're gonna see a little increase of inventory on market, as well as an increase on days on market. So a little bit of a inventory increase for potential home buyers, and it's going to create, as we head again into quarter four, it's going to create a lot of opportunities for home buyers to negotiate a little bit better deals in regards to pricing, seller concessions, because you have sellers sitting on homes a little bit longer than they may want to, just really due to the holiday season. So again, if you're a consumer or you're a realtor or real estate specialist, make sure you are informing your clients that, hey, as we head into not only this week, but quarter four, just be ready to potentially find some deals for home buyers and be ready to see some increase in inventory and days on market.
Love that. Love
Yeah.
that. That makes sense. And I think honestly too, with my update, the stock market kind of runs and fuels in the same direction. So I think now, we've kind of surpassed the beginning of the year, kind of surpassed all of the interest rates that's going on, inflation, unemployment, all the data is starting to steady and starting to become sort of steady eddy. And so we're moving now into the holiday season where we traditionally see an increase in stock prices solely because you've got people spending a lot of money because it's the holiday season, so they're buying a lot of goods. And before that, we typically see volatile markets because people are prepping and penting up their pocketbooks to be able to afford those types of spending. And so, if you're tracking the market, you can kind of see that it's following the traditional trajectory of what it does on an annual basis, where coming into September, October time, we start to lose a lot of value and stocks become worth less and less because the demand for those stocks have slowly started to shift because it's all waiting for what's going to happen in the future and taking advantage. And so throughout this past month, we've seen major declines. Most of the indexes have actually given up the gains that they have earned. S&P is still up pretty well, and the Nasdaq staying pretty resilient, but the Dow and those other bigger indexes are starting to be at that flat bottom. And so I say this all to say, keep up with it, ride the wave of the ups and downs, but expect volatility, especially from now till November. So a year from now, next year, we are going into an election year. Election years tend to change things. And so, we'll see that typical downward move. Then we'll see probably a little bit of a recovery going into January. And the second January hits, it's election year and things start to move as politicians say what they're going to say and they make statements. People get scared and the market hates uncertainty. So ride this wave of 2024 from here on out, expecting volatility. And if your stomach can't handle it, move into more conservative assets. The bond market is doing very, very well this year. And so if you're unable to take advantage and really stomach the movement, move into something safer and take advantage of those potential gains. So,
and that kind of speaks to a question that I have for you, Drew, which is, out of the clients that you serve, how many of them would you say invest with you conservatively? And what I mean by that is maybe they invest on a monthly basis, but it's not such a substantial amount to where it would hurt them. on a monthly basis. It's more a cost that they just kind of take on versus this is all my life savings that I'm pouring into an investment. You know what I mean?
Absolutely. Yeah. So I actually tend to specialize working with those folks, those people who are trying to build wealth over the long term. So they're putting in monthly deposits, they're making monthly contributions. So if the market does tank, you are able and well diverse to take advantage of riding that wave, continuing to buy at those bottoms and then ride the wave back up, but it's not going to hurt you. Now, the closer you get to retirement, which I have a ton of those clients as well, those are the clients that we have to worry about because their wealth has already been built. And so now they have to protect the money that they have and distribute accordingly. So it's kind of like where you are in your stage of life. The people who are making monthly contributions can afford to take the risk because they're trying to build their wealth. And those down markets provide great buying opportunities to see potential increase because you make most of your gains when you buy at a bottom, right?
Yeah. 100%.
But the distribution is where it's worrisome, but we are kind of allocating and planning accordingly for these market dips to be able to say, okay, you can't afford to take this much risk. Let's move you to something safer.
Gotcha.
Yeah.
Understood.
Yeah. So
perfect. Well, I got a quote to end us.
Let's do it.
We can just promote the meetup one more time.
Let's do it.
So my quote today is from Napoleon Hill. Ooh. And it is, the man who does more than he is paid for will soon be paid for more than he does.
We were just talking about this morning.
Yeah.
Seriously, we were meeting together early this morning and we were talking about, the successful people and how they come from, I noticed that they come from really two places. They're either immigrants or they're people who have family ties in the business. And I feel like most of them are the ones that are motivated to do those internship or those freestyle of work to get the experience to then be paid more. And it's this awkward, and you would think you'd be taking a backward step, but it's actually what propels you forward.
Yeah.
So
100% starting from the bottom is, I think, what you said.
That's it. That's it.
So, but I think it's true, right? Because when you start from the bottom, not only do you see and get to learn every kind of position of a company, if you will, but you're kind of humbled, right?
Absolutely.
Because it kind of takes the ego out of your work and you really have to prove yourself in a way. You really truly have to create value in a marketplace or in a given company if you want people to listen to you or give you better opportunities. And so that doesn't come from just getting, a silver spoon at the top of the food chain.
I love that.
Yeah, we encourage everyone as we head into Q4, maybe start goal planning and prepping for the beginning of the year in 2024 and what you want your life to look like at the end of 2024. And I can tell you right now, the only difference between where you're at now and where you want your life to look like is creating value. So whether that's creating value for your boss, your immediate family, your coworkers, whatever it is, if you can create value, right? Just like Napoleon Hill said, if you can do more work than what you're paid for, that's creating value. You become a valuable asset to that company, to the people around you. You will quickly become the person that you want to be and be in the position that you want to be in. So,
and the great words of Drake, started from the bottom, now we're here.
Exactly. I was thinking that.
I love it.
Exactly.
Well, again, October 26th, our meetup at the Arizona Sands Club, 5:30 to 8:30. Looking forward to hearing from Stu, and we look forward to seeing you all.
We'll see y'all soon.
Awesome. Take care, guys.